Welcome back. Today we're shifting gears to a critical part of financial planning. Module 6, Cost and Operating Expense Modeling. While revenue is exciting, understanding the expense side of the P&L is what ultimately determines your profitability and long-term sustainability. In this module, we'll cover cost behavior, COGS modeling, OpEx, headcount planning, break-even analysis, and unit economics. First, let's establish the foundation of cost modeling, the distinction between fixed and variable costs. Costs aren't just black and white. We have a spectrum ranging from constant fixed costs to volume-driven variable costs, plus semi-variable and step costs. Fixed costs remain constant regardless of volume. Think of rent or management salaries. To model these, we typically apply a small annual inflation adjustment. Variable costs change directly with volume. Examples include raw materials and shipping. These are modeled as a constant per-unit cost multiplied by volume. This leads to the contribution margin, revenue minus variable costs. It represents the amount available to cover fixed costs and eventually generate profit. Operating leverage is the degree to which you use fixed costs. High leverage, common in software, means small revenue changes can lead to large profit swings. Now let's look at COGS, the direct costs of producing the goods or services you sell. COGS includes raw materials and direct labor, but excludes indirect costs like sales, marketing, and general administration. COGS varies wildly by industry. A SaaS company might have 80% margins, while retail and manufacturing operate with much higher cost bases. You can model COGS as a percentage of revenue, a detailed cost buildup, or based on unit economics for product-focused companies. Operating expenses, or OpEx, are the costs required to run the business day-to-day that aren't tied directly to production. We typically group OpEx into three buckets: sales and marketing, research and development, and general and administrative expenses. The goal is efficiency. As a company grows, OpEx as a percentage of revenue should decrease, creating economies of scale. For most companies, people are the biggest expense. Headcount modeling is therefore the most detailed part of the OpEx forecast. People costs typically represent 50 to 70% of total OpEx. Beyond salaries, headcount drives office space, IT, and benefits costs. We track headcount using a flow model. Beginning headcount plus new additions minus attrition equals our ending headcount. Total compensation includes base salary, bonuses, commissions, benefits, and payroll taxes. It's often 1.5 to 2 times the base salary alone. Don't forget turnover. You need to model gross hires to account for both net growth and the replacement of departing employees. With our costs modeled, we can determine our break-even point, where total revenue perfectly matches total costs. Break-even analysis tells us exactly how much we need to sell to cover all our costs. It's critical for pricing and investment decisions. The formula is simple. Divide your total fixed costs by your contribution margin per unit or margin percentage. In this example, with $200,000 in fixed costs and a $40 unit margin, we need to sell 5,000 units to break even. The margin of safety tells you how far sales can decline before you hit that break-even point. It's your buffer against risk. Finally, let's look at unit economics, the fundamental profitability of your business on a per-customer basis. Unit economics tell you if the business model is viable. If you lose money on each unit, you simply can't make it up in volume. We focus on two key metrics: CAC, what it costs to get a customer, and LTV, the total value the customer brings over time. The ratio is critical. A healthy minimum is 3 to 1. Anything less is risky. Anything more is excellent and signals high efficiency. To wrap up, remember that cost modeling is just as important as revenue modeling for understanding true profitability. Mastering these expense drivers gives you the power to build models that are not just detailed, but strategically useful. This course is brought to you by SNB Experts. We help finance professionals build world-class modeling skills. For more high-level finance and modeling tutorials, follow our channel and hit the notification bell. Thank you for following this module. We'll see you in the next lesson to continue your financial modeling journey.